I've another day, another dollar lost in markets. Whew. It's been a frustrating day for many investors as Iran tensions continue to rise. We have earnings today. Google in the spotlight today. Whew, man, it's been a difficult day to be an investor, but that's part of the game. That's what we play for. So, whew. But yeah, we have Google earnings today. Hopefully, they can save the party. Whew, man, it's just an ugly, ugly day all out. They started bad after AMD earnings dampened the party. We continue to see downward momentum as more clarity came throughout the day. Some interest rate sensitives found the floor. Adobe found a floor. Nike up 5%. UPS actually bouncing off the lows, which is, you know, finding a footing. So there is some green in markets. It's just very hard to find. All tech selling off. The AI trade seems to be done, which is quite outrageous just to believe, given the fact that every single major hyperscaler continues to increase capex. I just don't see it. I don't think it's over. I could be wrong, but then again, we'll have to wait and see. Just it feels like the market wants to sell off due to due to more fears than anything else. But then again, it's been happening for the last couple of days. Let me share here. I will share system audio and I'll go here in screen number 2. Just double check with Teams, close window. Just double check that I'm not doxing myself there. Oop, that would have been a bad one. All right. Oh, man. Dragos is probably chilling. Graham, thanks for coming. We're about 12 minutes away to get the data. I have to turn on a couple of things on here. But yeah, we are expecting the results to come in right at the close for Qualcomm and Google. We'll keep it close. There is some green across the board. It just tells you that we were going to a safety trade. Pepsi continues to rally. Timothy must be happy in this case, as his top pick for this year continues to go up. Whoa, whoa, whoa.
1 minute ago now to begin the market on close imbalance data.
That's very loud. Yeah, but all of tech, all of AI continues to sell off. AMD down still 16% on the day after a blowout earnings. But there are some fears. Again, the AMD story will not come back until the second part of next year. People are pricing that in already. It's still at very high levels, but yeah, a 16% drop on AMD. It is a massive move. It rivals the ones from Microsoft. Nvidia down, but we are seeing a relief rally coming into the close, which is to be expected as the market sort of cools off into this. Oh man, the Dow is actually up on the day, so people are looking for safety, for strength. It has been so bad. It has been so bad.
Market on
Today's been a
close
day
imbalance
that I'm like,
S&P 500 buy
I
side
needed the
1 billion,
rest.
Nasdaq 100 sell side 36 million, Dow 30 buy side 200 million, Mag 7 sell side 7.4 million.
Interesting.
So, reminder,
Enphase.
in about 10 minutes' time, we get Google and Qualcomm earnings. Google EPS estimate of
Can you guys hear that?
$2.65, revenue estimate of $95.2 billion. Qualcomm EPS estimate of $3.41, revenue estimate of $12.2 billion. So, we'll be getting Q4 2025 earnings for Alphabet, Google, and Q1 2026 earnings for Qualcomm.
We have Hood today. We have Fluence today. This is a big name. The name was down 16% on the day. It actually recovered, which is fantastic news. I was quite surprised to see a sell-off like that, just because there's no news telling me that like the like the AI like it almost felt like today. It almost felt like people were thinking it's done, it's over, right? And it was like it just didn't make sense to me at all. Again, de-risking from earnings is understandable. There is data that we were supposed to be getting on Friday. We're not getting that until the 11th. So next week, Wednesday. Tomorrow's Thursday. We get Amazon earnings. Today, Google. Let it ride. But yeah, we've just been range bound for a little while now. I did play some trades on leverage ETFs on TQQQ today in my portfolio. I know that Dimitri's bought some AMD. And yeah, it's been interesting. It's been interesting. Our SMCI trade worked out yesterday, which is a little bit of a plus, even though I'm still negative on the day. It's hard to celebrate, but yeah, 14%. Earnings were fantastic, 40% beat, and a 21% beat on revenue. Very good earnings from SMCI, which again should tell you that the AI story continues to be booming. At least that's what we believe. We're going to do this quick and easy because we have a live stream tomorrow for you guys. And there's going to be a lot to talk about. That's for sure. That's for sure. In terms of the futures, because I know you guys are interested in this, gold touched 5,000 today. Silver did touch the 90 level. It did come back down. We'll see if that can continue. Natural gas was up today, but not enough for me to make some profit on my UNG calls, which is kind of sad. But what can you do? Some you win some, you lose some. Rest of the market, again, it's just a scary day. Just so much de-risking today. It didn't feel safe. It didn't feel safe. Whoa, Intel turning green on the day. Let's freaking go. That's great news. Intel turning green on the day. Qualcomm. It'll be interesting to see how they perform as earnings. It shouldn't be, but every single time the news has come, the market has taken it as gospel and it says major attack, and this is just de-risking from an event. Seems like the American wants to have more say in how that plays out, right? And the Iranians don't want anything to do with that. Which I don't think the Americans are kind of done for. So we'll see how that escalates. I mean, I don't think Trump wants to escalate to a war, but I'm sure he would be willing to just like throw a couple of bombs here and there. But yeah, Enphase, another company that had earnings yesterday. Bam, 40% up on the day. Insane. Just insane, to say the least. Five more minutes to end the day. It was a mad Wednesday day, that's for sure. Whew. And now we wait for the results. We'll keep this small. I just want to see how the market moves based on this results. Nothing tells me that we should be freaking out on this. The Meta earnings actually give me a lot of hope.
5 minutes ago, did we get Google Q4 2025 earnings? EPS estimate of $2.65, revenue estimate of $95.2 billion. Qualcomm looking for the Q1 2026 earnings, EPS estimate of $3.41, revenue estimate of $12.2 billion.
Oh, market selling up into the close. I don't think that's the thing. I don't think nobody wants to hold risk into the night. So we'll see whether this can hold and how this pans out tomorrow. Again, if this was like a sell risk, or somebody knew something, which would be even worse. That would be even worse. In today's episode of How Fucked Up is Fucked Up, it's fucked up. Mm. At least they're selling Diddy's off for a little while. Micron down 10% on nothing other than air. It just feels like there's air, So that's the problem, though. What happens when bad news, bad news equals bad news, but what happens when good news equals bad news? Yeah, everything went down today. Like anything, anything that was a speculation went down today. Everything. Don't matter what it was. If it had any shred of speculation, it's gone down. It's like you see like even home builders were up today.
1 minute ago now, lead with Alphabet Q4 2025 earnings.
Oh, man. Let's have a look. A minute away. Everybody, Godspeed. Yeah, but also AMD is a lot smaller than Microsoft, right? So it's understandable that can happen. It's literally 10 times smaller. So makes sense, Godspeed, everybody. Godspeed. 10 seconds.
10 seconds. Still waiting.
Whoop.
So seeing Qualcomm earnings coming through, the adjusted EPS of $3.50, which is a beat on the estimate of $3.41.
And the revenue, Qualcomm taking a small hit. But I'm not too worried
Also seeing
about what
Q1
Qualcomm
revenue
did.
coming in at $12.25 billion, which is a beat on the estimate of a miss on the estimate of $12.2 billion. Still waiting on the Google earnings to come through.
Qualcomm, I'm not
Also,
too worried.
Qualcomm, they see Q2 revenue at $10.2 billion to $11 billion. Estimate was $11.2 billion. They see Q2 adjusted EPS of $2.45 to $2.65. Estimate was $2.89. They remain on track to achieve fiscal 2029 revenue goals and near-term handset outlook impacted by industry-wide memory supply.
Qualcomm is gonna take a hit in here.
Seeing shares of AMD closing down 17%, the most since 2017.
We haven't seen a dip on AMD this big since 2017. Insanity.
Google stuff coming through now. Q4 revenue of $113.83 billion, a beat on the estimate of $111.4 billion. I see capex of 2026 capex of $175 billion to $185 billion, a beat on the estimate of $119.5 billion.
Wow. Google's going to spend
Google ad
how
revenue
much on
of
CapEx?
$82.28 billion, a beat on the estimate of $80.89 billion. YouTube ads revenue $11.38 billion, a miss on the estimate of $11.78 billion. Google services revenue $95.86 billion. That's a beat on the estimate of $94.9 billion. Google search and other rev $63.07 billion. A beat on the estimate of $61.37 billion.
Ooh la la.
And Alphabet's capex for Q4 at $91.45 billion, a beat on the estimate of $28.17 billion. Q4 ex-TAC revenue at $97.23 billion, a beat on the estimate of $95.17 billion.
Market don't like this. Ooh, Google is about to get
So just keep an eye on
Microsoft
Google
fate.
shares post-market, then down by about 5% post their revenue coming through and their earnings coming through.
Ooh, That's
Again,
not good.
revenue ex-TAC at
That's not good.
$97.23 billion, a beat on the estimate on
Right? You
$95.17
ran into
billion.
issues today. Yeah. Right here. I'm still trying to get the data properly. Revenue. Okay. So revenue was a beat by 2.8 billion, by 2.4 billion.
See Alphabet's Q4 EPS at $2.82,
Google services revenue
which
95.8.
is a beat on the estimate of $2.65.
YouTube miss. Google Cloud revenue was a beat.
Google says Gemini app has grown to over 750 million monthly active users.
They're increasing capex by 2x. Tell me that's not insanity right there. Estimated what's expected to come in at 120 billion. Now it's coming in at 175 to 185 billion. That's a 2x increase on capital expenditures by Google. Well, fuck. This continues. I mean, they're betting the farm here. That's for sure. They are betting the farm.
Also, Alphabet's Q4 operating income at $35.93 billion, compared to the estimate of $36.95
What was the
billion.
EPS? He didn't give us the EPS. What in the world?
Seeing Alphabet shares sinking lower, down by 7.5% now on higher than expected 2026 capex forecast. So again, as I said, Alphabet sees 2026 capex at $175 to $185 billion compared to the estimate of $119.5 billion. Seeing
That's
shares of
pretty insane.
Broadcom jumping 5% after Alphabet capex forecast. Nvidia shares climb 1% following Alphabet capex forecast as well.
After hours performance, let's go here. Let's go S&P. I mean, yeah, Broadcom is up on those news. Oh, I'm actually almost positive on Broadcom. Let's go. Did Broadcom have Qualcomm down 5%? I'm not worried on this. I think that's okay. Dish, boom. I am so baffled by this. Let me share some of the news with my people. Ba-da-ba-da-ba. Ba-da-ba-da-ba. Holy. Yeah, Google is recovering a little bit. They haven't even said the APS, really? What the fuck? Alphabet EPS of 263. Did they miss? Oh shit. 111. I'm so confused. No, that's the expectation. All right, so that was the expectation. My bad. Okay, so it's 263. Have a look. All right, so this is something we didn't know. Earnings per share was a beat, $2.82 versus the estimate of $2.63. Google is up. Yeah, Google is up. There's hope. We might be able to sleep tonight. Hooray!
So now seeing
damn.
Alphabet shares turning positive.
This was a weird release. That was a weird release. Oh, deal. All right, so EPS beat. That's good. EPS was good. The CapEx number the market didn't like initially, and then we have to wait for guidance.
Qualcomm says Chinese phone makers reduce build plans.
Yeah, Qualcomm is phones. It's like phone chips, you know.
Qualcomm says that shortage of memory is hurting outlook for phones.
So this is a memory, man. I think Micron is a buy right now. I think Micron made a mistake today. I think Micron made a mistake today. I think they did, dude. Crap. I'll take it. I'll take it. I'll take it. Oh, I just bought some Micron. Qualcomm just told me what I needed to hear. There's a shortage and they're going to take advantage of this shit. Oh, fuck. Fuck. No shit. Fuck. Shit. Forgot to watch this. And they're down drastically. All right, so that's why I didn't make any money. All right, that makes sense. Crap. Holy. So revenue approximate 400 increases approximately. But they like to do this, and then the expectations is that they will go up. What do you want to talk about? About Anthropic? Fluence did this last time and he ended up bouncing after the call. They literally are selling everything. Anthropic? I don't think the market's scared of Anthropic. I could be wrong though. It's a buying opportunity for Fluence. It's funny because they do the call tomorrow. They won't do the call today.
Let's take a look at the market wrap for the US session. US investors continued rotating away from tech heavyweights, long favored for their steady earnings in uncertain times, and toward a broader set of stocks tied more closely to improving economic growth. Bitcoin fell sharply. Stocks trimmed early losses after signs that nuclear negotiations between the US and Iran were still progressing, following reports that they had briefly stalled. The S&P 500 finished modestly lower, though most of its constituents advanced. The Nasdaq 100 dropped 1.8%, weighed down by renewed selling in software companies and even steeper declines among chip makers. After the close, Alphabet slid after forecasting spending that exceeded expectations. The shift out of mega cap tech and into small caps and value orientated stocks has gathered pace as investors position for stronger growth in 2026. Evidence of broadening participation was seen in the equal-weighted S&P 500, where large and smaller companies carried the same influence, which climbed 0.9%. The rotation
Yeah,
proved
buy a
especially punishing for momentum-driven strategies, as its tight stocks with strong recent performance suffered sharp declines, underscoring how quickly leadership is changing as investors reassess positioning. The S&P 500 fell 0.5%. The Nasdaq 100 suffered its worst two-day declines since October, and slipped below its 100-day moving average. A software sector exchange traded fund dropped 1.8%, while the chipmaker index tumbled 4.4%. Bitcoin hovered near $73,000, with derivatives
How did
markets
ARM do?
increasingly pricing in further downside. The yield on 10-year US Treasuries rose 1 basis point to 4.28%. The dollar gained 0.3%.
So Fluent misses, but they're expecting to sell to AI data centers by the end of the year. Okay. All right. You can buy Anthropic shares. Are they public? That's news to me. Yeah. Okay. I heard that. I heard the Claude news. Okay. That's fire, Graham. Thank you so much. There you go, Dragos. There you go. That's hilarious. They recovered a bit. Fluence. Oh fuck! I had a chance to buy. No. Thing is, like the Fluent story doesn't engage until the end of 2026.
So just a reminder with Trump, he is supposed to be, well, he was supposed to be speaking at 4 p.m. Eastern time. There isn't a live video of him. We'll keep looking for one.
What a day, man. What a day.
The reminder with Trump, he's participating in a policy meeting.
Think about Fluence. What's their market cap? Market cap is 3 billion. So not bad. And then earnings per share was worth it than expected. So that's why the company tumbled at the beginning. But we are expecting that to be the case. I got to pay attention to the call tomorrow. That's for sure. And then he's going to speak, but I don't think he's going to say anything crazy. At least I hope so. JP Morgan is up, which is good, right news. Sucky day to be an investor today, that's for sure. What time is the Google call? I don't think he's gonna say much. Like he did say that he would like the Iranian leader should be scared, but I don't think he. I mean, like, what else are they gonna say, dude? We have just taken the leadership of Iran. Like Iran is a different monster, right? Like Iran is not Venezuela. Let's check it out. I'm so tired today. I am so beat. I am so beat, man. So beat. Correct. That is very correct. So that's the big thing here. Arms down, and then Google. Google could have been way worse. Hopefully they save it in the call, but that capex spending is crazy. Did you guys see this? Oh, I didn't show you this. Huh. All right, so this were the Google results. Insane. Like cloud did great, is growing still and beating, but this, holy smokes! If anybody thought they were not going to spend on capex, there it is. Holy. The call should be the call's gonna be at 9:30. So it's like in a couple of minutes. There we go. Right there. So capex was expected to be 119. 2026 capex is expected to go at 175 to 185 billion dollars. It's an increase of around 50%. Oh, man. Yeah, dude. I called it out. Yeah. I talked about it in the beginning. Insane. It's 38% on the day. Data centers, man. Data centers. It's all data centers. It's all cloud. It's all infrastructure. It's all compute. We're in a compute constrained world right now. The world thinks we're gonna stop it, but at least for 2026, I think they're gonna buy an electric company. And like they just announced a deal. What was the thing? They just announced. Yeah, insane. But yeah, Google is a little bit down. We'll see what happens. The fact that I recovered this gives me hope. Then we have Amazon tomorrow. Mm. Of course, the story goes on. How you doing, Dimitri? Oh man, 100% it goes on, and like they're increasing by 50%. It's insanity. Thing is the market does not understand. Market does not understand, I swear. Yeah, that was a big drop. Not a lot of either. Hundred percent. 100%. And I'm actually, I think Amazon is gonna do really well tomorrow. So I'm in the camp that December was actually better than expected. I have a feeling that Amazon is gonna do really well tomorrow, and I am making a bet. I wasn't sure if Google was gonna, and I mean it was a good beat. It was good all round. I'm not worried, but I wasn't sure, you know. So, but Amazon, I have more confidence for some reason. Like I didn't pull the trigger on Google today. Like I bought some, but I didn't buy too much. And then Fluence is eating me alive today, which sucks. It dropped another. There was a time to exit just before, but yeah, I do have belief in Fluence. Yeah, it was down 10% and another 14%, down 24% from the lows. It's right now sitting at $24, so we could potentially rebound from here at some point or another. But stock did do that on earnings. I think it's like here, I believe. And then we saw the off scale. Again, this capex tells you that they're gonna spend the capital on it. It's just like they're such a small company too. And the question is like, will they be ready to take advantage of this before this ends? It's the big if here. But I'm still bullish, so I'm still bullish on energy storage. Let me have a look. Um, Intersect Power for 4.7 billion. Intersect Power. Multiple gigawatts of energy and data center projects in development or under construction, boosting Google's ability to build and secure electricity for its cloud and AI infrastructure. Intersect will operate separately under its own brand, but partner closely with Google on new projects, including co-located data centers in Power Site, Haskell County, Texas. Expected to be completed in the first half of 2026. Um, yeah, I think they are Intersect Power. Here, let's double check what they are.
Fed's Board of Governors votes to keep current capital buffer. So Federal Reserve finalizes big bank stress test criteria.
The company. I don't think they have a stock. Yeah. Oh, they do have. Huh. Huh. Very interessant. Even Nike's up. Like you know the world is going to shit when Nike goes up 5%. Um we're all in that boat too, you know. But there's no slowdown. There's no slowdown. Like every single company is like, you know what? You thought we were spending a lot? Well, fuck you. No. So it's like, so it's intersect. So it's they're looking for solar energy. Market's bouncing. Is there hope? Is there hope? There's hope. There's hope. Nvidia is pumping. Today was time to buy. I bought Micron. I'm kind of excited to have the stock. I bought some Micron, by the way. I think this was dumb. I really think it was really dumb. I got confirmation that there was bullish sentiment on this stock, and you just gave me an opportunity to buy. I will take it, motherfuckers. I will fucking take it. You piece of shit. 4p of 8. They're expecting next earnings to fucking balloon. Yeah, I get fucking confirmation in a couple of months for sure, motherfuckers. Motherfuckers! God damn it. Fuck, what a day. Ah! Sorry for the loudness. Holy fucking shit, dude. Yeah, earnings per share jumps drastically next quarter. And then we get the fucking. Like we go for them. 8. Like in Q2.
So just
they
seeing
are
correction here from a
expecting.
major newswire of Alphabet's Q4 capex coming in at $27.85 billion compared to the estimate of $28.17 billion.
All right, so there was a mistake. What happened here? There we go. Yeah, 100%. What did they just say? What did this guy just said? Write it down. Write it down. So the capex was less than expected. Wait a second. What? I knew it all along. Google was gonna pop. I'm just joking. I'm just joking. I wasn't sure. Fucking Google for some reason is out. What in the world is happening? Are they having the call? Oh, they're having the call. Yeah. I'm freaking. I'm so tired, guys. Sorry about that. Oh, earnings whisper, and we're gonna go to Google, and then we're gonna go here, and then. All right, so we're gonna go. Oh man. No, I can't go there. I'm going with
where
me.
agents can autonomously plan and execute complex software tasks. It already has more than 1.5 million weekly active users after launching just over 2 months ago. First-party models like Gemini now process over 10 billion tokens per minute via direct API used by our customers, up from 7 billion last quarter. Third, bringing AI to our products and platforms. We are shipping innovation at scale to bring helpful AI features to people everywhere. In January alone, we have launched personal intelligence in AI mode in Search and the Gemini app, introduced new features to Gmail and updated Veo, reimagined Chrome as an AI-first agentic browser through features like Chrome Auto Browse, announced Project Genie, which lets users create and explore interactive worlds generated in real time using Genie 3, our general-purpose world model.
Welcome,
We
everyone.
laid the groundwork for shopping in the AI era by introducing a new open standard for agentic commerce, the Universal Commerce Protocol, built alongside many retail industry leaders. Finally, from Android to Pixel, we are getting our best AI capabilities into people's hands. At CES, from XR to the living room and beyond. And to confirmers, we'll be introducing our Pixel 10a to our best ever rated Pixel 10 series very soon. Turning now to key highlights from the quarter, starting with search. Search saw more usage in Q4 than ever before, as AI continues to drive an expansionary moment. We have executed with incredible speed. We shipped over 250 product launches within AI mode and AI overviews just last quarter. We have integrated Gemini 3 directly into AI mode in search. Now search can better understand your query, dive deeper on the web, and generate interactive UI experiences. And last week, we upgraded AI overviews to Gemini 3, giving users a best-in-class AI response at the top of the search results page. We have also made the search experience more cohesive, ensuring the transition from an AI overview to a conversation in AI mode is completely seamless. These new experiences are proving to be more helpful and are driving greater usage. A few highlights. First, once people start using these new experiences, they use them more. In the US, we saw daily AI mode queries per user double since launch, and AI overviews continue to perform very well. Second, people are engaging in longer, more complex sessions. Queries in AI mode are 3 times longer than traditional searches. We are also seeing sessions become more conversational, with a significant portion of queries in AI mode now leading to a follow-up question. Third, people are searching in new ways beyond text. Nearly 1 in 6 AI mode queries are now non-text using voice or images. And Circle to Search is now available on over 580 million Android devices. Next, Google Cloud. Our growth in revenue, operating margin, and backlog highlights the strength of our entire portfolio. 1, we are winning more new customers faster. We exited the year with double the new customer velocity compared to Q1. 2, we are also signing larger customer commitments. The number of deals in 2025 over $1 billion
AMD shares
surpassed
up
the
1.9%
previous 3
after
years
the bell.
combined.
Nvidia up 2%
And 3,
in
we
after hours.
continue to deepen our relationships with existing customers who are outpacing their initial commitments by over 30%. Nearly 75% of Google Cloud customers have used our vertically optimized AI, from chips to models to AI platforms and enterprise AI agents, which offer superior performance, quality, security, and cost efficiency. These AI customers use 1.8 times as many products as those who do not, enabling us to diversify our product portfolio, deepen customer relationships, and accelerate revenue growth. Our product line has multiple monetization levers spanning infrastructure,
100%.
platform,
Google's
and
Pichai
high-margin
saying YouTube annual
AI-powered
revenue
products and
surpassed
services,
$60
with
billion.
14 product lines, each exceeding $1
And
billion
Google
in
lowered
annual
Gemini
revenue.
serving unit costs
We
by
offer leading
78%
infrastructure for AI
over
training
2025.
and
So again,
inference to our cloud
Google
customers,
CEO Pichai
with the
speaking,
industry's
otherwise, yeah,
widest
on the
variety of
quarterly
compute
call.
options, from our own 7th generation Ironwood TPU to the latest NVIDIA GPUs. Our 10-year track record
Vernova
in building our
pumping too.
own
Let's go.
accelerators with expertise in
I wonder if
chips,
this was a opportunity
systems, networking, and software translates to leading power and performance efficiency for large-scale inference and training. Our cloud AI accelerators serve the leading frontier AI labs, capital markets firms like Citadel Securities, enterprises like Mercedes-Benz, and governments for high-performance computing applications. We also offer our leading generative AI models, including Gemini, Imagen, Veo, Chirp, and Lyria, to cloud customers. In December alone, nearly 350 customers each processed more than 100 billion tokens. In Q4, revenue from products built on our generative AI models grew nearly 400% year over year, significantly accelerating from the prior quarter. Today, more than 120,000 enterprises use Gemini, including AI unicorns like Lovable and OpenEvidence, and global enterprises like Airbus and Honeywell. 95% of the top 20 and over 80% of the top 100 SaaS companies use Gemini, including Salesforce and Shopify. Gemini is becoming the AI engine for the world's most successful software companies. Leading enterprises are also driving strong demand for our enterprise AI agents. We have sold more than 8 million paid seats of Gemini Enterprise, our enterprise AI platform, to more than 2,800 companies, including BNY and Virgin Voyages, to streamline knowledge management and automate processes. Gemini Enterprise managed over 5 billion customer interactions in Q4, growing 65% year over year, for customers including Wendy's, Kroger, and Woolworths Group. Our integration of Gemini in Google Workspace is driving wins with global brands like Schwartz Group and public sector organizations like the U.S. Department of Transportation. We are also seeing momentum with independent software vendors. Revenue from AI solutions built by our partners increased nearly 300% year over year, and commitments from our top 15 software partners grew more than 16x year over year. Before moving on, I'm pleased that we are collaborating with Apple as their preferred cloud provider and to develop the next generation of Apple Foundation models based on Gemini technology. Up next, YouTube. I want to highlight 4 points. First, streaming. In the living room, YouTube continues to be the #1 streamer in the US for nearly 3 years, according to Nielsen. From the NFL to Coachella, YouTube is where people watch today's biggest popular culture moments unfold. Second, subscriptions. We continue to see strong subscription revenue growth across YouTube, particularly YouTube Music Premium. We'll soon launch new YouTube TV plans, bringing more choice and flexibility to subscribers with over 10 genre-specific packages. And the NFL has seen strong NFL Sunday Ticket subscriber growth with YouTube, with the highest paid subscriber number ever in the history of the product. Third, podcasts. To illustrate YouTube's popularity, in October 2025, viewers watched over 700 million hours of podcasts on living room devices, up 75% from just a year prior. And fourth, AI is transforming the YouTube experience for both creators and viewers. On average, every day in December, over 1 million channels used our new AI creation tools to supercharge their creativity. During that same month, more than 20 million viewers used our new Ask tool, powered by Gemini, to learn more about the content they watched. And finally, Waymo. This week, Waymo raised its largest investment round to date and is well positioned to continue its momentum with safety at the core. In December, we surpassed 20 million fully autonomous trips and are now providing more than 400,000 rides every week. Waymo continues to expand its service territory. Its 6th market, Miami, launched 2 weeks ago, and Waymo will soon expand its service to multiple cities across the US and in the UK and Japan. The team has made incredible progress on important capabilities, including opening up public service to airports and freeways. In closing, 2025 was a fantastic year for the company. A big thanks to our employees and partners worldwide. We are really well positioned going into 2026. Now, over to Philip.
Thanks, Sundar, and hello, everyone. I'll cover performance for Google Services for the quarter, then structure the rest of my remarks around the great progress we're delivering across Search, YouTube, and partnerships. Google Services revenues were $96 billion for the quarter, up 14% year-on-year, primarily driven by accelerated growth in Search. Adding some further color to our results. The 17% increase in Search and Other was led by broad strength across all major verticals, with retail particularly strong. On YouTube, the 9% growth in advertising revenues was driven by direct response. Network advertising revenues were down 2% year-on-year this quarter. Starting with Search and Other revenues, which delivered over $63 billion in revenue for the quarter. Sundar mentioned the expansionary moment for Search. The same is true for ads. We're investing in AI to drive significant improvements across all areas of marketing. We're expanding the entire playing field that advertisers can compete on. AI gives businesses the ability to reach more customers in more places than ever before. Gemini uniquely positions us to bring the transformational benefits of AI to ads in 3 critical areas for our customers: ads quality, advertiser tools, and new AI user experiences. First, ads quality. We've been deploying Gemini models to improve query understanding at a rate of almost a launch per month for the last 2 years. These improvements drive better query matching, ranking, and quality, making search ads even more effective. With Gemini across our ads quality stack, we evaluate relevance with greater accuracy than with previous generations of models. This has significantly improved our ability to systematically deliver more helpful, high-quality ads, contributing to a meaningful reduction in irrelevant ads served. Gemini's understanding of intent has increased our ability to deliver ads on longer, more complex searches that were previously challenging to monetize. Gemini models also have a significant impact on query understanding in non-English languages, expanding opportunities for businesses to scale globally.
Yeah, this
Second,
shit's interesting.
we're building more agentic actions into our advertiser tools. Businesses can now leverage Gemini in conversational experiences within Ads and Analytics Advisor to identify and run recommended actions such as generating new campaigns. Advertisers use Gemini as a real-time partner to assemble creatives. In Q4 alone, they used Gemini to create nearly 70 million creative assets via text customization in AI Max and PMax. For instance, Aritzia, Canada's premier fashion house, used AI Max to find new high-value customers that traditional strategies miss, delivering an 80% incremental uplift in conversion value for Q4. L'Oreal, one of the first alpha testers, used AI Max in 2025 across 800 unique campaigns in 23 countries and 30 brands. AI Max enabled the L'Oreal Group to maximize its presence across the full consumer journey, fuel its consumer growth, and increase revenue for DTC brands like NYX by 23%. The third area is how we monetize new AI user experiences in search. We have significantly increased our focus on AI mode and are in the early stages of experimenting with AI mode monetization, like testing ads below the AI response, with more underway. For example, we announced direct offers, a new Google Ads pilot, which will allow advertisers to show exclusive offers for shoppers who are ready to buy directly in AI mode. This new type of sponsored content uses AI to match the right offer provided by the retailer to the right user. As Sundar mentioned, we are building the era of agentic commerce and working with our partners to introduce the Universal Commerce Protocol in our consumer products and across the web. We've received tremendous feedback from the industry. Soon, people can use a new checkout experience to buy directly in AI mode and Gemini from select merchants. Turning now to YouTube, which remains the #1 streamer in the US for nearly 3 years, according to Nielsen. YouTube creators are providing an unmatched breadth of content. Our investment in AI innovation across creativity, viewing experience, and monetization continues to pay off. We're seeing strong traction in our subscription business, are innovating to meet consumers where they are. We added a new sports tier for YouTube TV at a lower price point. YouTube Premium Lite is proving to be a popular choice. And we continue to deliver strong year-on-year growth across YouTube subscriptions, particularly YouTube Music and Premium. Looking at monetization across YouTube, momentum continues in Shorts and the living room. Shorts now averages over 200 billion daily views, and as we've shared before, in a number of countries, Shorts earns more revenue per watch hour than traditional in-stream on YouTube, including the US. The retail vertical continues to grow, fueled by smaller advertisers increasingly adopting demand gen. Likewise, direct response continues to benefit from the momentum we're seeing with small and medium-sized advertisers. Viewers trust product and brand recommendations from YouTube creators, and we're focused on making YouTube a premier shopping destination. Innovations like shoppable ad formats are improving advertiser return on investment. During Cyber 5, advertisers piloted shoppable mastheads, a new interactive ad format where viewers browse products and send links to their phones for an easy shopping experience. On brands, our Creator Partnership Hub makes it easier for brands to find creators and develop campaigns. This holiday season, brands like JCPenney, Old Navy, and Target worked with creators for their holiday campaigns. Mattel partnered with 8 top YouTube creators to reach families during the peak holiday shopping season in a campaign that helped drive a 25% increase in search volume for Uno. As always, I wrap with the progress we're seeing across partnerships, where customers tap into the strength and breadth of Google's products to accelerate their transformation. I would start by joining Sundar in saying how pleased I am that we are collaborating with Apple as their preferred cloud provider and to develop the next generation of Apple Foundation models based on Gemini technology. We partnered with Reliance Jio to provide over 500 million consumers with an 18-month free trial of our Gemini suite of products and 2 terabyte of cloud storage. Reliance Enterprise customers will also get access to Google Cloud's Gemini Enterprise and TPUs, bringing the best of Google AI to every employee and workflow. The Home Depot is applying Google AI across the board, from cloud tools to AI-powered ads, and YouTube creator partnerships that connect with the next generation of doers. Their investments in PMax and YouTube creator partnerships have resulted in double-digit increase in ad clicks and visits. In closing, I'd like to thank Googlers everywhere for their contributions to our success, and as always, to our customers and partners for their continued trust. Anat, over to you.
Because it's 9. Yeah, it makes sense.
Thank you,
It's
Philip.
showing you the pre-market.
My comments will focus on year-over-year comparisons for the fourth quarter, unless I state otherwise. I will start with results at the Alphabet level, and will then cover our segment results.
So
I'll
it's
end with some
not-
commentary on our outlook for the first quarter and full year 2026.
but we should be
2025 was a
concerned
strong year of innovation and execution for Alphabet. These efforts, combined with our investments in AI, drove meaningful results across the business. For the full year 2025, Alphabet consolidated revenues were $403 billion, up 15% on a reported and constant currency basis. Moving to Q4 performance, we delivered strong growth in the fourth quarter. Consolidated revenues reached $113.8 billion, up 18%, or 17% in constant currency, and was driven by an acceleration in search and cloud revenues. Turning to costs and expenses, we reported a $2.1 billion stock-based compensation charge due to an increase in Waymo's valuation related to the investment round that was announced on Monday. The vast majority of the charge was reflected in R&D expenses. Total cost of revenue was $45.8 billion, up 13%. Tech was $16.6 billion, up 12%. Other cost of revenues was $29.2 billion, up 13%, with the increase primarily driven by depreciation associated with the deployment of our technical infrastructure, content acquisition costs largely for YouTube, and other technical infrastructure operations costs. Total operating expenses were up 29% to $32.1 billion. R&D expense increased by 42%, driven by compensation and depreciation. The increase in compensation was due to the Waymo charge and investment in AI talent. Sales and marketing expenses were up 12%, primarily driven by marketing investments to support the Gemini app and search. And G&A expenses increased 21%, primarily due to a shift in timing of our charitable contributions. Operating income increased 16% to $35.9 billion, and operating margin was 31.6%. Both operating income and operating margin were negatively impacted by the $2.1 billion Waymo charge in the quarter. Other income and expenses was $3.2 billion, primarily due to unrealized gains in our non-marketable equity securities portfolio. Net income increased 30% to $34.5 billion, and earnings per share increased 31% to $2.82. We generated record operating cash flow of $52.4 billion in the fourth quarter and $4.7 billion for the full year. This translated into $24.6 billion of free cash flow in the fourth quarter and $73.3 billion for the full year. We ended the quarter with $126.8 billion in cash and marketable securities and $46.5 billion in long-term debt. Turning to segment results, Google Services revenues increased 14% to $95.9 billion.
Yeah, that came out
strong
before.
growth in search and subscriptions.
This one,
Google Search and other advertising revenues increased
one
by
I didn't
17% to $63.1 billion, representing another strong quarter with continued growth across all major verticals, with the largest contribution from retail. YouTube advertising revenues increased 9% to $11.4 billion, driven by direct response advertising. Results were negatively affected from the lapping of the strong spend on U.S. election in the fourth quarter of 2024 that we've mentioned on previous earnings calls. Network advertising revenues of $7.8 billion were down 2%. Subscription platforms and devices revenues increased 17% this quarter to $13.6 billion, due to strong growth in YouTube subscriptions, particularly YouTube Music and Premium, and growth in Google One, which benefited from increased demand for AI plans. Google Services operating income increased 22% to $40.1 billion, and operating margins was 41.9%. The Google Cloud segment delivered outstanding results in the fourth quarter as the business continued to benefit from
I don't
strong
think so, at
demand for
least.
enterprise AI products.
Could be wrong.
Cloud revenue accelerated meaningfully and were up 48% to $17.7 billion. Revenues were driven by strong performance in GCP, which continued to grow at a rate that was much higher than Cloud's overall revenue growth rate. As Sundar noted, we're driving performance through strong growth in the win rate of new customers, signing larger customer commitments, and increasing spend with existing customers. GCP's performance was driven by accelerating growth in enterprise AI products, which are generating billions in quarterly revenues. We had strong growth in both enterprise AI infrastructure, driven by deployment of TPUs and GPUs, and enterprise AI solutions, which benefited from demand for our industry-leading models, including Gemini 3. Core GCP was also a meaningful contributor to growth due to strong demand for infrastructure and other services, such as cybersecurity and data analytics. We also had double-digit growth in Workspace, driven by an increase in average revenue per seats and the number of seats. Cloud operating income was $5.3 billion, more than doubling year over year, and operating margin increased from 17.5% in the fourth quarter of last year to 30.1%. Google Cloud's backlog increased 55% sequentially and more than doubled year over year, reaching $240 billion at the end of the fourth quarter.
Just don't say it's
The
OpenAI.
increase in backlog was driven by strong demand for our cloud products, led by our enterprise AI offerings from multiple customers. In other bets, revenues were $370
Just don't say the
million,
customer.
and
Just don't say
operating
the
loss
customer.
was $3.6 billion,
We all know it's
reflecting the
OpenAI, but don't say
$2.1
it.
billion Waymo charge I mentioned earlier. We allocate resources in other bets to businesses like Waymo, where we see meaningful opportunities to create value. Alphabet funded a significant portion of the $16 billion investment round that Waymo announced on Monday, which will allow the business to accelerate its global expansion. CapEx was $27.9 billion for the fourth quarter and $91.4 billion for the full year, in line with our expectation. The vast majority of our CapEx was invested in technical infrastructure, with approximately 60% of that investment in servers and 40% in data centers and networking
I have
equipment.
a bunch of portfolios.
In Q4, we returned capital to shareholders through $5.5 billion of share repurchase and $2.5 billion of dividend payments.
You want to see it? You want to see the
Turning to our
pricing?
outlook, I would like to provide some commentaries on factors that will impact our business performance in the first quarter and full year 2026. First, in terms of revenues, we're pleased with the overall momentum of the business.
Yeah, it is.
At current spot rates, we would expect to see an FX tailwind to our consolidated revenues in Q1. However, the volatility in exchange rates could affect the impact of FX on Q1 revenues. In Google Services, we expect growth to be driven by ongoing innovation in the user experience, as well as improved ROI for advertisers, keeping in mind the normal seasonal pattern for advertising revenue. In Google Cloud, we're seeing significant demand for our products and services, which we expect to continue to drive strong growth despite the tight supply environment we're operating in. Moving to investments, the investment we have been making in AI are already translating into strong performance across the business, as you've seen in our financial results. Our successful execution, coupled with strong performance, reinforces our conviction to make the investments required to further capitalize on the AI opportunity. For the full year 2026, we expect CapEx to be in the range of $175 billion to $185 billion, with investments ramping over the course of the year. We're investing in AI compute capacity to support frontier model development by Google DeepMind, ongoing efforts to improve the user experience and drive higher advertiser ROI in Google Services, significant cloud customer demand, as well as strategic investments in other bets. Keep in mind that the availability of supply, pricing of components, and timing of cash payments can cause some variability in the reported CapEx number. In terms of expenses, as we've discussed on previous calls, the significant increase in our investments in technical infrastructure will continue to put pressure on the P&L in the form of higher depreciation expense and related data centers operations costs such as energy. In 2025, depreciation increased by nearly $6 billion, or 38%, from $15.3 billion in 2024 to $21.1 billion in 2025. Given the increase in our CapEx investments in recent years, we expect the growth rate in 2026 depreciation to accelerate in Q1
Yeah,
and
like,
meaningfully
just being able to
increase
go like
for the full
this,
year. We're also planning to continue hiring in key investment
kinda good.
areas
And then you can
such
go
as AI and
here,
cloud.
funny enough, you can
In 2025, our
B,
teams delivered amazing
and you can see the
innovation,
B
executing with a
ratios,
high
and you
level
can
of
see
discipline and
this.
velocity. These efforts provided
Like
great
a bunch of data.
experiences
Gross
for
margins.
consumers
Oh,
and outstanding performance for creators, partners, and enterprise customers, driving strong revenue growth. I want to take this opportunity to thank our employees for their contribution to this impressive
a
performance.
shorter amount. Yeah.
Now, Sundar, Philip, and I will take your questions.
Oh shit! Crap! I didn't see that.
Thank you. As a reminder, to ask a question, you will need to press star one on your telephone. To prevent any background noise, we ask that you please mute your line once your question has been stated. And your first question comes from Brian Nowak with Morgan Stanley. Your line is now open.
It's a short squeeze.
Thanks for taking my questions. I have two, one on Agentic, one on YouTube. The first one on Agentic, Sundar, I'd be curious to hear about, as you look back at 2025, where do you think you made the most progress on new types of Agentic commerce products? And then looking into 26, where are you most optimistic to sort of have even more progress and utility for users and your advertisers? And the second one is on YouTube. You know, we've seen a lot of the new content creation models like Genie, et cetera. Walk us through sort of the Alphabet long-term vision for how Genie and some of these content creation tools could be integrated into YouTube over time.
Great, thanks, thanks, Brian. First, maybe I'll take the agentic part first. You know, I definitely think 25 was more about laying the foundation. You know, getting the models to start being more robust in agentic use cases, and you know, obviously, coding is the area where you know the progress was the most felt. In areas like commerce, I think we spent the year working with the ecosystem to develop the underlying protocol that's going to be needed for this agentic world. So I think the launch of Universal Commerce Protocol at NRF in January with a bunch of partners, founding partners, I think has been super well received. So I'm excited now that we've laid the foundation of interoperability on which agentic commerce can work. And now we are integrating those experiences into Gemini AI mode and so on. So I think this is the year where you will see consumers actually being able to use all of this, and I'm excited about the opportunity ahead. On YouTube, look, super excited by Genie. I'm blown away by, you know, spent a lot of time creating this incredible worlds. I think it's going to have a wide level of applicability. I think area where we shine in general is multimodality and representing the real world, and I think Genie is a further step in that direction in terms of building world models. All the innovation we are doing, be it our Imagine, Veo, Lyria, Genie, all that work we bring into our products and to our cloud customers, and YouTube is going to be a natural place for creators. We are going to keep incorporating these tools. Already creators are responding by adopting these, but we do want to put creators at the center of the experience, and that's very, very important to us. And you know, so it's for us making sure YouTube is a voice for creator expression is the foundation by which we will approach this.
Great, thanks, Sundar.
Your next question comes from Eric Sheridan with Goldman Sachs. Your line is now open.
Thanks so much for taking the question. Two, if I could, over the last couple of earnings calls, we've talked a lot about imbalances between demand and capacity for AI, both internally and externally. With the step function change in absolute capital dollars you're projecting now in 26, can you talk about the pathway to closing the gaps for the need for compute, both internally and externally, and how to think about some of the outputs of closing that gap as the year progresses? And again, the second part would be against that level of spend that you're now projecting for 26. How do you think about continuing to find operating efficiencies inside the business to fund those growth investments as well? Thank you.
Thanks, Eric. You are right, and we've been supply constrained even as we've been ramping up our capacity. Obviously, our capex spend this year is an eye towards the future, and you have to keep in mind some of the time horizons are increasing in the supply chain, etc. So we are constantly planning for the long term and working towards that. And obviously, how we close the gap this year is a function of what we have done in the prior years, right? And so there is that time delay to keep in mind. I expect, the demand we are seeing across the board, across our services, what we need to invest for future work for Google DeepMind, as well as for cloud, I think is exceptionally strong. And so I do expect to go through the year in a supply-constrained way. And maybe Anat can touch on the second part.
Sure. Thanks, Eric, for the question. I've mentioned on one of the previous earnings call our approach to how we look at efficiency and productivity. And we don't view this as an episodic one-time project or effort, but rather how we run the business on a regular basis and always seek additional opportunities to drive efficiency across the business. And certainly with the demand we're seeing, whether it's from external customers or across the organization, the more capital we can free up within the organization to invest, the better we can turn this flywheel of making investments to drive future growth. And we're doing this across the organization, whether it's within our technical infrastructure. Certainly when we invest at these amounts, we look at how we can ensure that we are the most efficient with every dollar that goes towards our technical infrastructure. There are scientific innovation that are part of that process. Technical innovation, as you know, and we've mentioned before, we primarily focus on construction of our own data centers. We do partner with some external parties on lease on occasion, but most of our data center we construct ourselves, and we ensure that we do it in the most efficient way, in a way that matches our workloads and our needs. We look at coding productivity that Sundar mentioned in the past. About 50% of our codes are written by agents, coding agents, which are then reviewed by our own engineers. But certainly it helps our engineers do more, move faster with the current footprint. We look at how we run the business across the organization. So using AI within the business to drive daily operations. It can be all the way from the engineering team to small teams within our back office. Even within my finance team, for example, we deployed agents within our treasury organization. We're deploying agents within how we pay and reconcile invoice, et cetera. So there are opportunities across the business that we evaluate on a regular basis to ensure we can free up more of that capacity to invest in our future.
Your next question comes from Doug Anmuth with JP Morgan. Your line is now open.
Thanks for taking questions. I have two. Over the last couple of years, we've seen considerable large language model leapfrogging, and many expect that to continue. What are the ways that Google can build and maintain its Gemini position around data and distribution and product integration? And then how should we think about the potential for TPUs to move outside of Google Cloud and into external data centers and develop as an incremental revenue stream? Thank you.
Doug, look, I think the LLM frontier, it's been an exciting trajectory, and I think 2026 will continue to show that progress. We're obviously improving these models across many paradigms, right? on pre-training, post-training, test time compute, and so on. And we are bringing multimodal models into the picture. We are bringing agentic capabilities. The coding area is showing a lot of progress, and obviously integrating all of this together and offering a great customer experience through our products as well as through our APIs to our cloud customers. To me, feels like there's a lot of headroom ahead. And as you've seen our trajectory over the past 2 years in terms of how we've been making progress, I think we are in a very, very a relentless innovation cadence, and I think we are confident about maintaining that momentum as we go through 26. In terms of TPUs, I would think about it as it's reflected in our overall part of what makes Google Cloud an attractive choice is the wide choice of accelerators we bring to bear here, and we meet customers in terms of what their needs are and the choice, as well as other things we bring as part of Google Cloud, the end-to-end efficiencies in our data centers. All of that comes to bear, and that's what you see in the strong momentum in Google Cloud. And given the overall investment we are making, we expect to be able to drive that momentum there. So that's how I would think about it.
Thank you, Sundar.
Your next question comes from Mark Mahaney with Evercore. Your line is now open.
Thanks. 2 questions. One, could you just comment a little bit on the YouTube ad revenue, that 9% year-over-year growth? It sounded like direct response was good, and it sounded like from search that retail came in relatively strong. So it's a little surprising that didn't kind of come through in the YouTube ads revenue growth. And then Sundar, can I ask you to try to get ahead of a debate in the market, which is there's kind of maybe at a DeepSeek moment again. You talked earlier about Gemini being the AI engine for some of the most successful software SaaS companies out there in the world, and it just seems like there's a market belief that these software companies are kind of losing seat power, losing pricing power, and it looks like it'd be a really terrible customer base. I can't imagine that that's actually going to happen, but could you just talk about it? You're at the forefront of AI and the impact that that's having on software companies. Why wouldn't that be, or why would it be undermining the economics of your large software SaaS company base? Thanks.
So, Mark, first of all, thank you for the question. For the full year 2025, our YouTube's annual revenue surpassed $60 billion across ads and subscription. In Q4, YouTube ads was driven indeed by strong growth in direct response. On the brand side, as Anat shared, the largest factor negatively impacting the year-over-year growth rate was lapping the strong spend on US elections. We also saw a slight impact in some other brand-related verticals. But taking a step back, I think it's important to think about YouTube ads and subs holistically, because when a user shifts from being an ad-supported user to a YouTube Music and Premium customer, it has a slightly negative impact on YouTube ads revenues, but a positive impact on our business. And we had strong revenue growth in YouTube subscriptions this quarter, particularly in the YouTube Music and Premium category. Maybe the interesting part is what we're actually excited about, our roadmap in brand, the opportunity on connected TVs, more innovative ad formats. For example, the shoppable mastheads I spoke about earlier that we piloted during Cyber 5. We're working really, really hard to further connect brands and creators, scaling sponsorships, and enabling advertisers to showcase their products, their services during high visibility spotlight moments. We continue to expand the functionality of the Creator Partnership Hub, making it a lot easier for brands to actually find creators and develop campaigns. We're heavily focusing on brand deals, on measurement efforts. So there's a lot of interesting work in the pipeline. And on top of that, we actually see opportunity also for upside with performance advertising. There's a lot of momentum with demand gen adoption across small and medium advertisers. We're also excited about the opportunity for continued ads innovation and direct response, like, for example, shoppable formats, including in the living room, which is then helping drive strength in retail, the continued momentum in shorts, and so on. So overall, we're quite excited. Yeah.
Great. And Mark, on in terms of Gemini adoption and how what this moment means for SaaS, etc. Look, at least from my vantage point, I definitely see We have very, very good SaaS customers who are leaders in their respective categories. And
I think
what
a
I
lot
see
of
the
people still
successful
use
companies
Google.
doing is they are definitely incorporating Gemini deeply in critical workflows, be it on improving their product experience and driving growth, or using it to drive efficiency within their organizations. And I think it is an enabling tool, just like it has been an enabling tool for us across our products and services, be it search, YouTube, etc. I think the companies who are seizing the moment, I think, have the same opportunity ahead. And at least we are excited about the partnerships we have there, and the momentum. If I look at it in terms of their tokens usage, etc., the growth has been very robust in Q4.
Thank you.
Your next question comes from Mark Shmulik with AllianceBernstein. Your line is now open.
Yes, thanks for taking the questions. Two, if I may. The first for Anat is, can you talk a little bit more about the relationship between investment levels and how you kind of expect core performance to trend? Is there like an operating income or a free cash flow objective that you solve towards, or how do you think about greenlighting resources and projects? And then the second question for all of you, a year ago, we probably could have guessed the answer to this question. But given where we are today, for each of you, what keeps you up at night here as you think about the Google story and what's next? Thanks.
Thanks, Mark. Let me start with a question on the investment framework, and it's an important one, and as you can imagine, an important one for us as well. We have a highly rigorous framework that we use internally, where we look at all the needs for investment, whether it's from our own organization or from external customers, and have an estimate of what that investment could potentially yield, obviously not just near term, but long term as well. So we take that into consideration when we make the following decision. The first one is the total investment that we make across the company. This was, for example, in 2025, the $91 billion we invested in CapEx, and our estimate for CapEx investment this year. So what's the total envelope that we want to invest to ensure that we can drive both near-term and long-term growth for the company? And then the second way we use that framework is to just allocate these funds across the organization, determine where we should make these investments. And throughout the year, as you can imagine, we always look to understand where things are moving, whether it's the external dynamics or internal dynamics. And I've mentioned some of the supply chain pressures we're seeing externally. So we look at this with a highly rigorous framework to make sure that we're making the right decision. It was exciting to see the fact that we're already monetizing, and you saw it in the results that we've just issued this quarter, the investments that we've made in AI. It's already delivering results across the business. I know in cloud, it's very obvious external, but you've heard the comments on the success we're seeing in search, the comments from Sundar and from Philip, and then the frontier model development that really serves as the foundation for the organization. We then also look at just the cash flow generation, and the health of our financials and the balance sheet. That's important as well. So we take that into consideration when we make the decision about the overall level of investment. We want to make sure we do it in a fiscally responsible way, and that we invest appropriately, but we do it in a way that maintains a very healthy financial position for the organization.
And yeah, maybe I can answer on what keeps us up at night. Look, I think overall, we've been on this AI first trajectory for over a decade now, and it's what we've been methodically thinking our way through. It's the reason why we've been working on TPUs for over a decade, as an example. But I think specifically at this moment, maybe the top question, is definitely around compute capacity, all the constraints, be it power, LAN, supply chain constraints. How do you ramp up to meet this extraordinary demand for this moment? Get our investments right for the long term, and do it all in a way that we are driving efficiencies and doing it in a world-class way. And so that's where I think we are meeting the moment well, and but it's definitely an area where I'm spending a lot of time on.
Your next question comes from Michael Nathanson with MoffettNathanson. Your line is now open.
Thanks. I have one for Sundar and one for Anat. Sundar, you mentioned Universal Commerce Protocol a bunch of times. I wonder if you could spend some time talking about the rationale for developing it, the opportunity that you see it solves for, and what it means for the product discovery funnel for consumers. And then for Anat, any color you can provide on a CapEx guide between longer duration assets like buildings and infrastructure and shorter cycle assets like technical equipment. That'd be helpful. Thanks.
Thanks, Michael. Obviously, people go through a lot of commercial journeys across many of our surfaces, search, YouTube, Gemini app, and so on. So I think there's, as well as we support through cloud and ads, our entire retail partners as well. And the opportunity to improve the experience, I think can be a kind of a huge foundational uplift here. But it's important to be approaching it keeping in mind that our users, as well as merchants here, and figuring out that value. Part of what's been good in designing the Universal Commerce Protocol is it makes it much easier for users to complete transactions, but at the same time, it allows merchants to help showcase the range of their offerings if they want to make promotions, etc. So all of that is built into the protocol. And I think you have to get that value prop for the ecosystem right to make the experience better. And so it's foundational. And more importantly, we are now implementing the protocols, and our Gemini models are making progress in those agentic capabilities. And I think so I'm excited about a future where, as people are going through discovery, searching, finding new things, if they're interested in acting upon it, all of that is seamless. And so it overall creates an expansionary moment.
And the question with regards to the CapEx and the kind of what makes up the total that we've announced for this year and last year, approximately 60% of our investment in 2025, and it's going to be fairly similar in 2026, went towards machines, so the servers. And then 40% is what you refer to as long duration assets, which is our data centers and networking equipment. And I think you're probably referring to the depreciation delta between them. Those long-term duration assets depreciate over, the building could be 40 years or longer. Other components may be less than that. Another important component is how we allocate this CapEx. And we've commented in the past about the allocation of our ML compute across the business. And for 2026, just over half of our ML compute is expected to go towards the cloud business.
Thank you so much.
She said 40?
Your next question comes from Ross Sandler with Barclays. Your line is now
Yeah,
open.
I'm a YouTube Premium user.
Great. Just a question on the native Gemini 750 million. So we added 100 million MAUs in the fourth quarter. Could you just talk high level about usage and retention of native Gemini? And is this 750 the right way to measure your progress against companies like ChatGPT, or is there another cohort of users that aren't in that 750 that maybe we should also consider? Thanks a lot.
Ross, I think we definitely saw, I would say, an extraordinary period of growth in Q4 for Gemini app. It's not just the growth in monthly active users, but there is definitely, there was a sharp increase in engagement per user on the app. So all the metrics, be it active usage, the intensity of usage, retention, all showed distinct progress across iOS, web, Android, etc., and geographically globally. So it definitely all the product experience improvements, the work we did with Nano Banana, the progress with the Gemini models, all translated into strong momentum. And that momentum, is continuing. So we are excited about that, and we'll continue to invest. Obviously, there are many people who are getting a deeply AI native experience in the context of AI mode in search as well. And we are definitely seeing strong growth and progress. And the introduction of Gemini 3 in AI mode was a very positive driver as well. And obviously, we'll continue to evolve these experiences, and I'm excited about the opportunities there.
Thank you.
Your next question comes from Ken Goralski with Wells Fargo. Your line is now open.
Thank you very much. Two, if I may, both on search. First, could you walk us through how you are evolving your views on the monetization of AI search activity, given the more conversational nature and longer periods of engagement per session? Consumer utility is increasingly driven by the on-platform results, not specifically the link outs and referrals. In that construct, how do you think about increasing the revenue opportunity to match the consumer utility? Is this increasingly where premium subscriptions play? And then question two, and it's related, as you think about partnerships such as the new Apple partnership on Siri, how do you think about the right way to align for success with those partners? Previously, as disclosed in the DOJ documents, et cetera, it was a revenue share relationship. But now, if you think about the utility that you're driving through AI search and through Gemini on those platforms, it may be less related to the actual search, quote unquote, search revenue. Could you just talk a little bit about how you align with partners for success there? Thank you.
So first of all, it may be worthwhile to say that the acceleration we saw in the search was not due to a single driver, but was really the result of many different parts of our business showing strength and working well together. And maybe I quickly add the vertical perspective: retail, finance, health drove actually the greatest contribution to search revenue, though nearly every major vertical actually accelerated in Q4. More specifically to your question, the ongoing innovation is, as you know, core to what we do, and the enhancements to the user and the advertiser experience really continue to drive our performance. And we make hundreds of these changes every quarter. We see AI overviews and AI mode continue to drive greater search usage and growth in overall queries, including important and commercial queries. Gemini-based improvements in search ads help us better match queries and craft creatives for advertisers. I talked about the understanding of intent and how this has significantly expanded our ability to deliver ads on longer and more complex searches that were frankly previously difficult to monetize. AI Max, for example, is already used by hundreds of thousands of advertisers and continues to unlock billions of net new queries in that sense. We see strength with SMB advertisers expanding their budgets and adopting automation tools, leading to better ROI. On the creative side, we're using Gemini to generate millions of creative assets via text customization in AI Max and PMax, and so on. So we're very pleased with what we're seeing here.
And our last question comes from Justin Post with Bank of America. Your line is now open.
Great. Just want to follow up on the Gemini app. Obviously, great growth there. Are you seeing any cannibalization of search as far as activity as people start using that app more? And then second, on monetization, where are you on that? And with Agentic and other ads coming, could that be incremental to your growth over the next few years? Thank you.
Right now, overall, I think we are giving people choice. People are obviously using search, experiencing AI overviews and AI mode as part of it, and Gemini app as well. And the combination of all of that, I think, creates an expansionary moment. I think it's expanding the type of queries people do with Google overall. And so overall, some of it all is what we see as a growth opportunity. And we haven't seen any evidence of cannibalization there. And maybe Philipp can comment on the monetization.
Yeah, I think Sundar previously commented on agentic and how we think about it. And look, in general, as with all of our products, we really focus first and foremost on creating a great user experience. And we're very excited about where we are with the ads and AI overviews and early experiments in AI mode, including innovations like direct offers and our roadmap for the future. In terms of the Gemini app today, we are focused on a free tier and subscriptions and seeing great growth, as Sundar discussed. But ads have always been part of scaling products to reach billions of people. And if done well, ads can be really valuable and helpful commercial information. And at the right moment, we'll share any plans. But as we've said, we're not rushing anything here.
Thank you. And that concludes our question and answer session for today. I'd like to turn the conference back over to Jim Friedland for any further remarks.
Thanks, everyone, for joining us today. We look forward to speaking with you again on our first quarter 2026 call. Thank you and have a good evening.
We're still down, and I don't like it. I don't like it. So Google didn't save the day. I mean, the earnings were good. CapEx gives hope to the data center plays. So AI is still not done. We are seeing the benefits. We just can't see them fully yet, you know? There's like the nice thing is that Google will find different ways to monetize. They took a hit on, they invested a bunch of money on Waymo, a couple of $1 billion here and there. So that's interesting. It's interesting. I mean, like, so far I'm happy. Like, hopefully this is bullish for tech. We'll see how it performs tomorrow. I'm thinking Amazon could bounce tomorrow with earnings, given the fact that it's like most of the like people are talking about like benefits with AI and advertising and like products that they could add. I don't know if you guys know, but like the one thing that got me really bullish on Amazon is the fact that they're putting like ads on like Amazon TVs, which was interesting. So yeah. And they're thinking that the memory constraints will cause supply chain issues, which is good for Samsung, Micron, and the rest of like, yeah. Whew. Market cooled off a little bit, but the fact that Google is increasing capital expenditures, I mean, it's not bad. But yeah. At least the semiconductors are finding a footing, but the spending ain't going to stop in 2026. That's for sure. I mean, we're seeing a rapid increase in 2026. So TSM would have been likely benefit from that as well. I'm surprised TSM is not here, but yeah. Oh man. All right. I'm going to go take my dog out. I'm going to take a shower. I'm going to go to bed because my goodness. No, I think the thing is just like it's memory, right? So it's but like high, I think it's like high bandwidth memory. So it's usually like Micron that makes it, right? That's what Broadcom makes, like has issues with it too. I've been like digging a little bit deeper into this. So yeah, I think it's just like I don't know if it's storage or memory, but I think if it's memory, it's probably RAM and stuff. It's probably those chips. So Micron benefits from this the most. I would have to pay attention because Broadcom benefited most from the current thing, the current announcement. So but yeah, well, at this point we are hitting a resistance. We'll see if that maintains tomorrow. We still have to wait for Friday for Iran. Tomorrow we're supposed to be getting data. Market doesn't like the uncertainty about the jobs data either. So I think, yeah. BLS missing data. BL economic October 2025. So employment situation Wednesday, February 11. The consumer price index February 11. CP shit. Okay, no. Okay, that makes sense. All right. So employment situation. So that's the unemployment data. It was expected on the 6th. It's coming in the 11th. And then consumer price index, which is fine. That's not a big deal. As long as the data is good, who cares? And then real earnings 13. And then February 6th. So we are getting some unemployment data, just not all the unemployment data. Okay. This is the December data. They're catching up, but hopefully, I mean, the question is how much is Trump asking for, right? Because like Iran is not having a fun time right now. So yeah. All right, guys. Thanks so much for watching. I'll see you tomorrow at 1:30, 1 hour before market open. Oh, stay strong, guys. Fuck this market, but stay strong, you know. Hopefully it doesn't get any worse, but it's in the cards, you know. It could. I don't think the probability is there, but it could. Yeah. Yeah, but that's okay. It's just Fed members, right? Not much you can really do. All right. Thanks so much for watching. Graham, MVP, Dragos, MVP. See you guys tomorrow. Dimitris, if you're still watching, peace. I'm so wrecked. Whew. I'm so tired. So tired.